Hi, my name is Ozzie Jurock. I'm the host of Ozbuzz, where we have the privilege of chatting with the movers and shakers in and around the real estate industry in Canada. And today, we are blessed to have with us the real leaders in the mortgage industry. We have Mr. Mark Squire, the Chief Executive Officer and President of VERICO, and Jared Dreyer, who's the Senior Vice President of Corporate Relations of VERICO. And they're running one of the largest, most respected networks of the mortgage brokerage business in Canada. I mean, imagine 35,000 families got a mortgage through your broker network, and some $20 billion was sent out. Now, I know Verico is there since 2005. Now, in the last 19 years, what sort of was the key of its success?
Ozzie, I appreciate, first of all, having Mark and I on very much, and we appreciate doing this. But I would definitely say, starting off, it's our members, right? Our members did all the numbers that you put together, and our membership is really taking advantage. And it's our members of our network that really excel and really put it forward and provide great customer service, and then on a continued basis. And we have a long tenure of our members that have done that. And so I think that's part of the real secret of success. And Mark, I know you have a couple comments as well on that too.
Yeah, well, to Jared's point, so yeah, Verico was founded back in 2005, actually by Jared's father and a business partner, kind of with one single, desire in mind, is bring together entrepreneurs that wanted to run their own business, and that's what Verico is all about. And it's continued to grow over those last 19 years. So it really is about our members, and we've got a really strong group of members. So we're really proud.
Well, it's such a business that is so relationship oriented. You have to not just have the numbers, but you got to feel what the family's needs are and what are the kids are needed and what's the future. I mean, so what kind of members do you look to attract? Well, what kind of members join Verico?
Well, they truly are entrepreneurs. So first of all, we don't typically attract, when someone becomes a mortgage agent or initially a mortgage broker, we don't tend to attract people that are just starting out. We attract people that have been in business for a period of time, have gotten their feet wet, maybe somewhere else. We always use the line, Verico's not a stepping stone, we're a destination. It's where, mortgage brokers kind of over time decide they want to run their own business. They want to put their own stamp on it. And that's where Verico fits well. So with Verico, we allow the brokers to be in business for themselves, but not by themselves. And what we mean by that is we offer a number of products and solutions, whether it be technology, ancillary products, that they can take advantage of, or not, right? So everything is kind of a la carte, but we provide all those tools, plus we provide support through, we have RVPs out in the field that will provide, ongoing training, and access to the leadership team, such as Jared. Jared has been a broker, so he's got that experience. I've been on the lender side most of my career, so we bring a really nice balance to augment and support the membership.
Yeah, I like that comment about you don't work by yourself. You're working together with a group. You may be by yourself, but you're not alone, right? So you have all the backup things. The other thing is you have experience. I know that Jared was not just very, very active in the Verico network, but he's also been a past chair of CMABC and the Mortgage Professionals of Canada. So it's great to pick up the phone and talk to somebody who's been there and really can tackle most of the questions that arrive at. Now, one of the most exciting questions I'm going to be asking, that everybody is asking of a mortgage professional, is there have been so many changes in the mortgage rates over the last 18 months. How has that impacted the market?
Well, it's definitely impacted Ozzie. It's impacted all of us, right? I think for the marketplace that's gone on there. And, I think, the rate increases have gone so fast and so quickly. And that also, in addition with the rate increases, also the stress test. And I think that's a lot of people still understand that. And that's really affected the marketplace. So whatever the contract rate that it is, so if you're getting, let's say, a rate at 5.5% or 6% that was there, add 2% onto that, you have to qualify at 7.5%, 8%. And of course, we know what house prices are currently in sort of Greater Vancouver and Toronto. So it does require a lot of income and limit people out of the marketplace on there, right? But thankfully, that stress test was in place for a long time, and when it was at 5.25, and it did, I think, weather the storm that we've had on here. So I think, from our perspective, the marketplace has just changed the amount of buyers that are in there and the amount of people that can qualify to get a mortgage.
Yeah. Go ahead.
So absolutely. So I agree with all that. But at the end of the day, there's still houses being sold and still, people doing stuff, right? So the market has definitely slowed down. We've seen it slow down this past year. VERICO itself, kind of the sum of the parts as far as all our offices, we are down year over year, but there's still business being done, right? And we're very optimistic as to the future and what that holds. I'm sure we'll chat about that as we get into the conversation. But yeah, there is still business out there. We've seen our members shift, right? Because what the clients need and what they qualify for. So they may have did more business with some of our A lenders, our Schedule A banks, and we're seeing that shift a little bit, Ozzie, to near prime lenders and even to the private space, into the institutional private.
Well, that's why you need a broker, right? He takes a look at you and he says, Ozzie, nice guy, but your credit rating is on the lower scale, so we're going to have to move you to a different broker. I mean, yes, sales are down across the country. I mean, Mark, you're in Ontario, and Jared, you're in BC. It is not that different. I think the Vancouver market is below 30% below its 10-year average in sales. But that doesn't mean that 70% is still selling. And so our job and your job is to get your clients into the 70% that sell. And that's why you have all those instruments. It's not just the banks, because the banks in many cases, they're nice looking and they have nice looking windows, but the rate in the window is not your friend.
Yeah.
Well, and
it is. Go ahead, Mark. Go ahead.
Yeah, no, and that's the value the broker brings, right, Ozzie, is that they can talk with the client, understand the client's needs and their credit profile, and then determine where they're best suited, whether or not it is with TD or Scotia or soon to be Bank of Montreal or National Bank, or is it with Home Trust or Equitable Bank, right? And that's the value the broker brings, is they work with multiple lenders and they can place the consumer where it's best for that consumer based on their credit makeup.
And I was going to say too, I think like a lot of things, like everyone's had to look, the mortgage broker and the realtor, the industries have got more resilient, and I think that's sort of when we go through this and having experience on your tenure, you have to change what your daily habits are. And I think that's one of the things that has the benefit of the professionalism of the mortgage broker, is they're looking at how we can help our clients in different ways. What can we do to help our referral partners, and look at all different options to bring out better techniques to help people, and provide better customer service. And so that's when you have a bit of a slow time, you can re-look at your business and evaluate it there, and to be better. So when it does change around, and hopefully interest rates do change, coming down lower, that there's going to be more opportunity, but you're better equipped to service your customers.
I think Mark made the point that it wasn't just the rates, but the speed at which rates increased. That was the dramatic change that we had to face. But I sometimes think these kind of markets are opportunity. I'm an old real estate branch manager from yesteryear. But one thing was for sure, I rather worked in a tough market. And the agent that survived in that tough market, they would be in the industry forever, right? Whereas the guy or girl that came and just wanted to drive as fast as they could with a full price offer, that wasn't really beneficial to everybody. So today, I'm of the old school. I'm not all email, and it all has its place in social media, but in the end, you got to pick up the phone. And that's what I found when I talk to some of them VERICO brokers, they're always talking about who they just talk to. When you talk to somebody, even if you just make a phone call, it's funny, one of my boat brokers called me out of the blue. I hadn't talked to him for 2 or 3 years, and I know what he's doing is looking at his Rolodex, But the people that work they get the business that the 70% has gone to. And as you said, it's probably going to go up much higher. So do you experience more or less consumers that are using a mortgage broker than in the past?
Absolutely. We're seeing the percentage of consumers gravitating towards mortgage brokers increasing for sure. We have the highest percentage throughout Canada. The highest percentage is in BC. And that's kind of where the broker industry started, and it actually moved its way east. And we're also seeing the younger demographics gravitate a bit more towards brokers. But that said, getting credit financing is more complicated than it used to be, Ozzie. What makes up the family income is different than it used to be. There's a lot of business for self. There could be some foreign income. There might be some rental income. So there's a lot more complexity, and then you layer on regulatory changes. So a mortgage broker or agent, they're a subject matter expert, right? That's what it's like going to the doctor. You go to the GP or you go to the specialist, and the mortgage broker really is a specialist. They understand the credit aspect, as well as understanding. One of the things is for them to know all the lenders, what their guidelines are and what they look for, and then they kind of match the two up. So yeah, we are seeing, there was conversation like 5 years ago. Oh, well, the broker industry, will it cease to exist down the road? The broker industry is stronger now than it's ever been, and I don't see that changing.
Well, and I hope it's the same with the real estate industry. They've been forecasting its demise for the last 20 years.
Yeah. In the broker industry, like all your Mark's comments are right on, and ultimately it's a choice. Like they provide the choices for the consumer, and I think that's really what everyone wants to really look at. They want their options, right, so that they can make a decision on what's the best product for them. And the mortgage broker provides all that. And I go back to you in your comments. I do agree about going back to calling and everything, but also the industry itself and the brokers have done a really good job on social media promoting out the value proposition and getting more and more. So I think that creates more awareness all the time of why you should be working with a mortgage broker to help you, especially considering one of your major financial decisions that you're making, right?
Well, we have a real estate group that we meet once a month, and last month I just spent an hour on your mortgage binder. And I said, what the hell is a mortgage binder? Why do I have to deal with it? Well, if you don't want to deal with it now, you will have to deal with it when you're sitting in front of your banker or your mortgage broker. You got to have your lease agreements if you're in the investment business. You got to have all the documentation, all, as you pointed out, the various sources of income. And you have to have it already, because you enable the mortgage broker to better negotiate on your behalf if you have it all together. And the other thing is the days of calling in the morning and get the mortgage in the afternoon, those days are over, right? The banks can be, I was at the developers conference, and the senior developer says, well, I used to get a nice $50 million loan from one bank. Now I need 6 banks to put the loan together. So the world is changing, but it's not over. In fact, it's perhaps more interesting to be a winner like you are in this kind of environment. Now, I got to ask you, though, I know you know that question is going to come. What is the Bank of Canada doing in terms of rates this year, and when?
Well, that's if only we had a crystal ball, right?
Yes, on both sides.
Yeah. You know what? It's so hard to say. Everyone has a different prediction on that. I don't know if I'm pessimistic or realistic. I don't think we're going to see a change until at least June, and then we'll maybe see a drop then. I think just the fact, though, that I don't envision any more increases, Ozzie. I think they'll hold it flat, and I think even that signaling that there isn't any increases, that will help with consumer confidence, and that's really what we need. I was talking to someone last week, and they said it's not about, we talk about the, inflation, and we talk about this. It really comes down to the consumer. Is the consumer comfortable with where things are at, and are they ready to move? And once consumer confidence is there, and we start to see things happen, the market's going to come back. The reality of it is we have the federal government has huge immigration objectives, and I know they're looking at, you know, maybe tweaking some of that, but they still have huge objectives. We have a supply shortage in this country, and after this, for the last year and a bit, we've got pent-up demand. So, you know, the market is going to rebound. My crystal ball, my projection is 2025 and 2026 are going to be good years.
I think there's still opportunity though this year, like for sure, beginning of this year, and I think one of the things, I think we haven't got the interest rates right as far as what the Bank of Canada was going on there. Even I think Scotia, which was the most, their economist was saying about 8 times, and it went even further than that. That was the most aggressive. And I remember back then we're all like, "No, that's not going to happen," and so we're all wrong. Potentially,
exactly.
This will be all right. But I do think that if the consumer, the data, it's all data driven, you know, right now, like, you know, from what the Bank of Canada is looking at. So again, we have to see how the data is. But I'm a little more optimistic that I think they're going to come down faster and more expectations. And most economists that I've read have said that the Bank Prime is going to drop between 1 to 1.5% this year. You know, and that's what you need. And again, sailing on what Mark has said, it's all about getting the confidence of the consumer, right? You know, and that's the whole thing. And also interest rates, to making sure that if the interest rates come down lower, it's more affordability to get into the marketplace. And especially with adding on to, you know, the stress tests and qualifications that go on. So.
Yeah, as much as we may not like the word, but it's a psychology in the individual and in the market. It's confidence is absolutely very, very important. The interesting thing is that we are always so concerned with our rates. And yes, the rates are high. But when I look at the last 50 years, 45 out of those 50 years, we had a mortgage rate that was higher than 5%. It is only the year 2016, 17, 18 that we had actually lower rates. So where we are right now, and I keep hearing the term whisper rates. I guess if you have a really good credit rating and you're over 800, and then the bank says, okay, bring them here. We even one of the fellows told me on Wednesday that he got 4.9%. Well, whenever you hear the word 4, you're actually at below almost a 50-year high, but we're so involved in the rates that at the stress test, of course, are much, much higher. I'm talking about insured mortgages and, of course, the lending rates. But the point that I'm trying to get at is we have to adapt to all markets. I think I mentioned to you once before, I had the privilege of being the president of a very large real estate company with 10,000 employees. I was on TV all the time, and I said, 11% is a good rate for the family. I mean, yeah. I try and make sure I beat all those videos down with a stick, and then people saying, are you crazy? But we came from 16. So really 5 to 7 is not the end of the world. And the beautiful thing is that we still want to buy real estate. You know, this morning, this is the end of January, but this morning I was reading that 87% of the Canadians still would rather own real estate as an investment than the stock market, even though they're piling into stock markets. Seems to be, it's not the individual Canadians, it's funds and algorithms and big investments. The individual still has their money preferred in real estate, but they want some certainty as to the outcome on the rates and so on. Now, I would say, Mark, that our central banker said exactly that. Last week, he said he thought June, the allowed, might be, and in the United States, you have the heads of Chase, Manhattan, some of the largest institutions, some of them saying it's going to go up. Then we have Bill Ackman and his crowd, and they're all saying it's going to go way down. And you sit there and say they're looking at the same thing, but they come to a different conclusion, right? And so we in the mortgage industry, we just have to live with what there is today. And it still remains to be the investment of choice, as far as I'm concerned, for the average person. You're building wealth, you're building equity. And what people have to realize, it's not just the rates. You pay off the mortgage, you add equity on an ongoing basis, you know. So anyways, it's an interesting world. Excuse me. What type of lenders do brokers work with other than banks?
Jared, do you want?
Yeah, well, there's a multitude of sources, and that's like, you know, along with the, you know, We have like, the major banks, TD, Scotia, National, Equitable Bank, Home Trust Bank coming in. Soon to be Bank of Montreal is going to be coming into the broker industry again there. And then we also have lenders such as First National and MCAP, Merrick's that are sort of monoline lenders and that have been actually one of the things that have been broker partners for 30 plus years. The majority of these lenders have been around for a very long time and very well funded and have a very unique product offerings. So that's kind of where the broker comes into play again, is that about providing choice, and to provide options so that the consumer can make a great decision on where they want to place their mortgage with and who to choose that. And so the broker can provide all the options available to them and provide all the terms and conditions, prepayment penalties, your payment options, your flexibility, portability, assumability, all the things that are there available so that you are informed of making that decision the best of your ability instead of just having one option to it for you.
To that point, like all those various lenders, one of the things that we talk about when we do a webinar with our network with some of those lenders is what's your niche, what sets you apart, and there isn't one lender that has it all, right? Some lenders, it's your typical mortgage, it's 5, 4, 10-year, whatever, traditional mortgage product. We've got another lenders that they do reverse mortgages. That seems to be their niche. We've got some institutions that focus on HELOCs, like Manulife, the Manulife One, National Bank, all in one, Scotia Step. Like those are unique products and maybe fit the needs of that particular client. So that again speaks to the value of the broker is they've got line of sight on all of that. If you were a consumer, and sometimes as a consumer, you don't know what you want or need, right? You have to interview and ask those questions. But the mortgage broker can then determine where the best place is for that client based on what they're telling them. So yeah, there's tons of a lot of lenders out there and offering a different set of products.
Well, that's the interesting part is it's all out there, but how the heck do I know who is doing what? Who's special? Who's in my niche, right? And that's why you need a professional, no question about it. In terms of the size of the mortgage brokerage industry, how big is the mortgage brokerage industry as opposed to all the other available sources?
The challenge with that is there isn't a reporting mechanism that captures that on an annual basis, Ozzie. So it is a little bit of trying to, we try to scope that out, based on our knowledge of, how much volume our company does. And we're part of a larger, our parent company and as well as our competitors. Based on what we determine, based on our volumes, we think about 150 to 175 billion a year goes through the mortgage broker space. But from an outstanding perspective, CMHC back in November said that the outstanding mortgages in Canada is about 1.96 trillion and continues to grow.
Yeah.
When you consider that $1 trillion is $1 million houses, then we're talking some big numbers. This is what I always think that in my own personal view, real estate will always go up because we'll always have inflation because we'll never pay back the debts. I mean, we owe the world $300 trillion. And the US debt went up $4 trillion in 2 years and now had over 34 billion. So the only way that, in my view, they can pay it back is through inflating the currency or debasing the currency, if you want, and that will have an impact on real estate. It has had that for 50 years. That's my view. So that's another reason, though, I think that if the person worries about, should I really get a 5.5% mortgage and will it be down 2 years from now to 2%? No, it won't. I think I'm with you, Mike, that the rates are now found in equilibrium. And there are some saying it'll go up again if inflation keeps on going up. I doubt very much. I think they want to find this equilibrium, and I think they found it. And maybe the downturn won't be as much as, and I hope you're right, Mark, as a 1.5%. Mark, I mean Jared.
Yeah.
Several of the forecasters say a quarter in in May or June, and a quarter nothing in a month, and the next one in July, and the next one, and that's it, 0.75%. But as you said, the stock market once 8 turned out. So whatever it is, we live, and certainly I know your company lives in what ever the rate is, that's beneficial for the client. In that regard, can you tell me, we hear A lender, then we hear B lender, then we hear private money. Does that mean the only difference in that is that it's more expensive to go with a B lender or a private money?
It can. It really comes back about 4 or 5 years ago. They used to talk about risk-based pricing, and really that's what we're at now, right? So you've got an A lender or a prime. Some people refer to it as prime lending, and then near prime, and then private. And it really comes down to that risk-based pricing. So if the individual, the credit makeup, maybe they don't fit into the prime space. But the other thing there, Ozzie, is you have to be careful. You just can't assume that it's because of poor credit. It could be how their income is derived, right? Mm-hmm. So a self-employed person may not qualify under the prime because it's harder to, determine where that income comes from and stuff like that. So mm-hmm. It is our mind initially goes to that it's they're not paying their bills and stuff like that, but that's not always the case. There's more complexity to it.
There's so many factors now, required. There's so many factors to get it underwriting again. And, so you have to be, again, working with a broker. They're going to you have to make sure you're giving all your options. And, and one of the things with even our lenders and Mark and the test this too, you need to know the story, right? What's behind it, right? And that's one thing I can say for consumers out there, be like your broker is your partner looking to get you the best options available to you. So work with your partner on everything that you can. And there's more paperwork that's required now. So as you said, your mortgage binder, as you go back, Ozzie, which I love on that, that's what you need. You need a mortgage binder and everything that you have there. Plus, all your income, your down payment confirmation, your history. So that way the broker can work with you to provide those options available.
If you have any certainty, the financial institutions want more information, and it's not personal. They want it from the big corporations, and it's not that they're expecting a disaster, but they just have to be doing a certainty kind of a book. But look, this is really very, very interesting. Maybe I can bother you to walk across the country with me. I know, like in Vancouver, we have 200,000 immigrants. I know Ontario attracts a lot of immigrants, in Alberta. You have brokers everywhere. What is your sense on what do they feel, say, in Ontario? I know the sales are down there as well, but generally, are they optimistic?
I would say going into 2024, there is more optimism, cautiously optimistic, I would say. I think everyone sees that we've maybe hit that trough, right? And we're going to come back out of it. Yeah, it might be a little bit slow at the beginning of this year, but as Jared said, there's still lots of business there. But I would say that people overall are cautious. I think cautiously optimistic is. I'm not sure if that's the right terminology, but I think that they're hopeful that this year is going to be a better year than last year.
How about BC?
I agree with those comments. It's a positive. There's a lot more positivity. I think, last year was definitely a very challenging year, for everybody involved in the industries, that we've had. So I think this year there's at least giving back and circle back on, it's about confidence, again, it's so in taking away fear and providing some confidence, right? And I think that's one of the key things. If the messaging can come from the Bank of Canada, we're not going higher, right? That leads to some certainty, and then you can make decisions, right? And I think that's the key thing is if you have at least some sort of certainty, you can make decisions on where you want to go. And I think also from anything from our, like for the mortgage brokerage industry, and there, you know, you like going back to the comments made earlier, you still got to work hard, and like, and nothing replaces that. And I don't think this year is going to be any different than that part. You're still going to have to work as hard as you've been working in the last year to go to have success in that, to help your clients out and find out, you know, the best options for them. So you got to stay on top of that. But I definitely think there is a lot more optimism coming into this year for sure than last year.
Just to that point, Ozzie, you know, we've just finished our business and financial planning for 2024. A lot of the lenders, whether or not their year end is October 31st or December 31st, they've done their financial planning as well. And the majority of the lenders, as well as VERICO, are all projecting year-over-year growth. So collectively, we're all optimistic that it's going to be better. And the last comment I just want to make, as far as Jared's point, that's one of the things that we talked to our network members about last year, was basically getting back to the basics. And it's funny, we had you know, over the last few years, because business was, you know, the real estate market saw this too. Like there was just so much business, you didn't have to work your database, right? It was just falling off the trees. And then all of a sudden things change, and, you know, people were going, now what? And that's where we talked about getting back to basics. Actually, one of our offices said she reintroduced the phone into her office, and they were doing call blitzes. And that was one of the things that Jared and I talked about, was pick up the phone and call your database, call your clients. Right. And the clients are concerned because of rates going up and everything else. They want to hear from their professional, right? They want to hear from their mortgage broker. And that created some opportunity. And if nothing, it will create opportunity in the future. Keep connected to your clients. So that was our big thing that we talked a lot about last year, was getting back to basics.
Well, there's no question about it, particularly since in Ontario and in BC, the government has gotten involved in new regulations and new things agents need to do, both on real estate sales and mortgage brokerage, and the public is confused. And so just being able to talk to somebody, well, what does that mean to me? And that is the most important part. Alberta is doing really well. They have a lot of immigrants. So I think across Canada, you know, as I mentioned earlier before we taped, I was at a developers conference. 1,200 people came out, totally sold out. Lots of people that had their development stalled last fall are dusting them off and are getting ready to relaunch. It generally is more of a feeling of optimism. But I think in the long run, and I want to finish with that, I said, I think you're very fortunate in that VERICO is recognized in the industry and by its lender partners, you know, as being the most respected network in Canada. I think there's nothing better anybody can say to me about me, that if you're most respected, and you are, and for you, Mark, and you, Jared, and your team, it's something VERICO can be really proud of.
Thank you very much.
Thank you, Ozzie, and definitely proud of our membership, because our membership is the ones that make it for us.
Take care. All the best.
Take care.